All right, hello everyone. Thanks for joining us for Ourboro's very first Fireside Chat. This is the fire of the Fireside Chat, and I have here Gary Fooks, who is the CEO of 812 Mortgages. Gary has been a mortgage broker for a very long time, having done over $1.5 billion worth of deals and being a top independent mortgage agent for many years. 812 has been one of Ourboro's partners from the very beginning, one of our earliest partners. So what that means is if you are a home buyer looking for a property and you're not sure of who to talk to for your mortgage, and you come to Ourboro, we will most likely be sending you to Gary's company and his team of wonderfully qualified mortgage specialists who will guide you through the mortgage pre-approval process as you look for your property. So Gary's here with me today to just chat a little bit about the mortgage market. Just to warm up, what's the vibe on the street? What's the word on the street in terms of the latest round of rate hikes?
Yeah, I mean, look, a lot of people are nervous, right? I mean, they bought a home, we've seen a 400 basis point rate increase over the past 8 months, practically unprecedented in our lifetime. And nobody planned for this, really, right? And if you had the benefit of locking into a fixed rate, I mean, you're kind of extremely happy. But if you're in a variable, you've got concerns, are we going to go higher? How much higher? Affordability is a big question, which we're going to talk about. So I would say there's a little bit of nervousness, in the market, depending on the nature of someone's mortgage and what their affordability is today.
Yeah, and for those home buyers that are now just looking to get into the market, that are back and forth, do I go fixed? Do I lock in at that high rate right now? Or do I go variable in anticipation of it decreasing? What kind of advice are you giving buyers?
Yeah, I brought a crystal ball with me, so I got to get that. Look, I think when you're buying a home, the first thing you have to think about above all the rest is affordability, right? So if you can afford the payments and any change in that payment that goes higher is going to force you to lose sleep at night, you have to go fixed, right? Mm-hmm. This is not a gambling game. This is one of your biggest payments every month. They attribute about 40% of your gross household income to the mortgage. Mm-hmm. So you don't want to gamble with your mortgage rate. Mm-hmm. So typically variable rates are about 0.5% higher than lower than bank rates. So, we've seen a lot of rate increases over the past year. Is it possible you'll have a little bit more? I mean, anything's possible. Much more, probably unlikely. Mm-hmm. So I think my prediction is around this time next year, as long as inflation's in check, you're actually going to start seeing rates come back down a little bit. Mm-hmm. And I do expect rates to really start to come down kind of Q1 of 2024. Mm-hmm. So if you're kind of going in now and you're saying, well, I'm near the top end, I'm getting a 0.5% discount to what the fixed rate is, and I actually expect rates to go down in the next year or so in a 5-year term, probably makes better sense to go variable. Mm-hmm. But again, if affordability is in question, that argument goes out the window. Exactly.
Yeah, for sure.
Because again, variable gives you flexibility. You can convert to a fixed. You can't go backwards. So affordability is the big one that I always advise people of.
Excellent. Thank you.
Yeah.
All right. There is a lot of talk of 2023 being a once in a lifetime opportunity for buyers in terms of getting to the market. This is an unprecedented, well, not unprecedented. This is quite the correction that we're seeing in the real estate market. So what would you say to buyers that are currently on the sidelines that are thinking either they're waiting for that rate drop to happen next year or they're waiting for prices to fall even more? Like what's the messaging?
Yeah, my messaging is if you can afford to get into a home today, take advantage of it. Mm-hmm. We don't know what the future holds. We don't know if rules will change. We don't know if rates will go up. We have massive immigration coming in. They predicted 1.3 million new immigrants from last year to the end of next year. We did 20% of that target in the last quarter, and now those numbers are increasing. Builders are holding back inventory, 90% of inventory. There's a massive shortage of homes out there. So don't wait. You cannot predict the real estate market. It is impossible. And especially if you're buying the home with Ourboro to live in it, I mean, the amount of money you're throwing away and burning every month in rent, you're never going to make that back. So I always say that if you qualify now, take advantage of it because you can't predict and you can't time the market.
That's a really great point around renting versus buying. So it's actually a really interesting spot for buyers that are looking to buy below 1 million because they could theoretically buy on their own with as little as 5% down and get a high ratio mortgage. Now, what do you say to buyers that are considering, okay, do I buy on my own with 5% down and mortgage insurance, like a higher mortgage, but lower down payment? Or do I buy with Ourboro and have a lower mortgage, but lose a little bit of that equity? What's the math there? Or how would you break that down?
So again, there's a couple things to think about. One is, again, affordability, right? If you could buy on your own, but it's at the top end of your budget, and that may give you anxiety or stress, may not be the best solution for you. If you have to use 100% of your savings to buy that home and all the closing costs, and now you're left with no reserve, no cash on the side for an emergency, that again, I think is a risk.
Okay, so Gary, it's an interesting point around renting versus buying because it's especially fascinating for buyers who are looking for homes under $1 million. There's some interesting dynamics there around down payment savings requirements and mortgage insurance. Can you talk a little bit about that?
Yeah. So look, the rules today in the mortgage world are we'll call it the 5% rule. So the way it works is the first $500,000 of your purchase price, you can put 5% down. The next 500,000 up to $1 million, you have to put down 10%. And at $1 million, it's automatically 20%. So I'll give you an example. If you're buying for 700,000, it's 25,000 on the first 500, and it's another 20,000 on the next two. So that's $45,000 as a down payment, right? Once you get to $1 million, immediately it's 200,000. We're going to estimate about $600 a month for every 100,000 worth of mortgage money, right? So if you're buying for just under $1 million, let's say it's a $900,000 purchase, you're putting the 5% rule down. Let's also remember that because of CMHC, they're adding another 4% back into your mortgage. So really your down payment is negligible. It's like 1% when you walk away. So on a $900,000 purchase, you pretty much owe $900,000 and you're paying roughly $5,400 a month. Versus $1 million purchase, you're getting more home, and now your mortgage is $100,000 less, right? And now you're at $4,800 a month, right? So you have a bigger home, you have less monthly payment. So that's where you kind of have to decide what makes most sense. And, the larger the home, typically the more it goes up in value. So from an investment perspective as well,
greater
leverage. You're getting greater leverage, right? Yeah. And remember, you're paying back the insurance fees, CMHCs, et cetera, over the course of 25 years, right? So that extra, 40, 50 grand over 25 years amortized, it's really hundreds of thousands of dollars.
Yeah.
So, you're still paying that one way or the other.
Exactly. So CMHC fees only apply for homes under $1 million and if the initial down payment is less than 20%.
That's correct.
So by working with Ourboro, not only do you get a lower mortgage and potentially higher purchase value, but you're also saving on mortgage insurance, which could be significant if you factor in that you're paying interest on that premium over a 25-year period.
Yep, that's absolutely correct. And then again, you have flexibility. Like once that mortgage insurance is in your mortgage, it's there. You cannot, it doesn't disappear. With Ourboro, you may make a change in a year or two. Your dynamics may change. You don't owe the rest of that money for the rest of your life. So I think there's a lot of advantages to working with Ourboro, for multiple reasons.
Yeah. Let's talk about some of the benefits of working with a mortgage broker. You've been in this business for a long time. You've seen all sorts of buyers, all types of incomes, like living situations, income situations. What are some of the benefits of working with a mortgage broker?
Yeah, look, there's a big misconception in the world of mortgages that you have to go to the bank, right? And look, the banks do an incredible job in marketing. They spend a lot of money every year. And, when you think of mortgage, you think of Big Five Bank. When you think of coffee, you think of Starbucks, Tim Hortons. It's just the marketing works, right? So for example, with us, we pretty much work with almost every lender across Canada. So there's about 65 Main Street lenders. There's about 7,000 different products. So with us, we're going to find you the best product at the best rate that fits your needs, right? You're never going to walk into a bank, and I'm not going to name any names, but you're never going to walk into a Big Five bank that's going to say to you, you know what, one of the competing Big Five actually has a better product for you. It'll never happen, right? I mean, they're only going to sell you what they have, and that might not be the best product for you, right? It might not be the best opportunity. You may not qualify, right? So we have a lot of customers that are potential Ourboro customers, that are potential home buyers that will go into a bank and a bank say, I can't help you. You do not qualify, but they actually do. They just don't qualify with the bank.
Right.
One of the things I always hear is, I always tell customers, look, I will never tell you not to go to your bank. In fact, I'll encourage you. You have a relationship with them. They know you. They have a profile. Speak to them, right? But always come back to me and let me tell you what I can do for you.
It is such a balancing act. It's interesting. So for buyers working with Ourboro, we provide them the option to work directly with the bank. It's our lending option, as well as the option to work through a mortgage broker. And our messaging is that talk to a mortgage broker if you want more of that personalized advice, of the evaluation of your financial scenario, and they can guide you. We trust that you have their best interest at heart, and if you know the lending product is better for them, you'll definitely direct them that way. What are some of the benefits of the alternative lending route, which is an option that we have for our buyers right now?
Sure. Look, you're seeing what's happening in the economy. Everybody's got a side hustle these days, right? The banks are not typically using your side hustle for income, right? So you have a lot of, really strong borrowers that, are gig economy. So they're contract workers, they're seasonal, they make cash income. They're entrepreneurs, right? And the days of using their income at the bank, those don't longer exist because you need long track records of reporting that income, to the government. So it's qualified income. And, it won't get you a mortgage today at the bank. Anybody who's self-employed, everybody who has gone to the bank or just knows they have non-traditional income, there's a lot of opportunity out there for them to be first homeowners, homeowners in Canada, which is the Canadian dream. And we'd be glad to help them with those opportunities.
Wonderful. And to balance it out, though, in terms of what are some of the things to look out for if a buyer is working with an alternative lender?
I mean, look, you want to make sure that if the buyer, my advice is that the buyer can qualify to go with a bank, the rate's going to be slightly better. Typically on the alternative side, if credit is good, the alternative lenders are slightly higher, about 0.5% higher on mortgage rates, and usually a shorter term, usually a 1 or 2 year term. So I would say the alternative lender is more of an advantage when you don't qualify at the bank. But if you qualify at the bank, absolutely, it's a slightly lower rate, it's a longer term. We obviously want to put you into that bank, or what we refer to as the A side of the mortgage world. The other thing to consider is that alternative lenders do typically have some fees involved with their mortgages. The average is usually a 1% lender fee, they call it. So, 1% of your mortgage amount one time. And then if you stay with that lender for 30 years until you pay off your mortgage, typically you don't pay that fee ever again. Some alternative lenders may be a little bit less, but for the most part, I think 1% of your mortgage amount is a good, average to use to calculate into your closing costs.
Yeah. So, we valued your relationship and the support that your mortgage brokers have provided our buyers, and Ourboro very, very well. So what are some of your experiences in offering the Ourboro product to your clients?
Look, I think a new concept always takes time, right? Even the idea of working with a mortgage broker, which we've been, they've been mortgage brokers for decades, it's still a new concept to a lot of people. So any new concept takes time, it takes education. So I think a lot of times when people are not familiar with something, they're human nature is to push back. Like, whoa, this doesn't make sense.
Skepticism.
Yeah, for sure. What's wrong, right? Like,
what's the catch?
I don't want them owning my home, right? So I think the biggest one that I hear a lot is, well, I don't want to partner in my home, right? I don't want somebody else to own the home with me. And, my answer to that is 100% of zero is zero.
Yeah.
Right? Like if you don't qualify on your own and you're going to miss the real estate wave and it will come back, then you get nothing. Right. Yeah. So I think just making them understand the value, the benefits, holding their hand, because it's one of their biggest financial decisions they're going to make in their life.
Yes.
You just got to give them a lot of extra TLC, really walk them through the benefits, really walk them through how it works, upside potential, downside potential. And I think once you educate them and you make them understand that every month they're burning cash renting and they can actually be home buyers and start building their generational wealth through their home. I think that nervousness, that anxiety, that thinking of there's something wrong starts to really fade away very quickly. And that's one of our biggest objectives is the education part of it. Because once clients are educated, then they can make the right decision. And they may still decide that's not worth it for them, even though I don't know why they would say that. But reality is, they make an educated decision and we're good with that.
That really is one of the great values of working with a mortgage broker, because you can look at that entire financial profile. You can understand what the impact of a mortgage versus rent would be on their monthly budget, and the impact of our equity down the road as well, too, in terms of their financial and their long-term financial planning purposes.
Yeah, I like to use an example. Maybe I can share with you for a lot of potential customers. So, let's say they're buying their first condo, right? 600 square foot condo. It's going to cost you almost $600,000 today. And if you're going to rent that condo today, you're probably paying $2,600, $2,700. I mean, you got a parking spot, it's $2,800. And again, that's money out the window. So, let's use 3,000 as kind of a rough number. 3,000 a month for 5 years, $180,000. It's 180 grand you're never seeing ever again. That $3,000 mortgage will roughly get you almost the same amount of money to buy that condo. And then even at today's rates, let's say, $1,000 of that is going back towards principal. Yeah. In that same 5 years, even if that condo didn't go up, you've just saved $60,000 back in principal payments. Yeah. So that's a $240,000 swing. You would have lost 180, you made 60. It's a big number. It's a big difference.
And that's regardless of Ourboro or no Ourboro. It's purely just renting versus owning. Yeah.
That's it. Now, if you can afford that $600,000 condo and you have at least $30,000 and you qualify because you report all your income, great. Do it yourself. There's a lot of people that don't have that full down payment and don't qualify at the bank. And this is the only solution they may ever have to actually own that first property.
Just to get onto that wave, like you said, and then ride the wave
part of the club.
Get the next property.
Absolutely. Ride the market. At some point you may need to upsize, ride the market on the way up, and then look for that opportunity when it's the right time.
Yeah, exactly. Speaking of the market, the real estate market has been quite the roller coaster the last 12 months. What advice do you have for mortgage professionals like those on your team, or even real estate agent professionals as they're trying to guide home buyers through this, which is potentially even more tumultuous time ahead or just questionable period?
Yeah, I think you got to do double the work, right? I mean, when there's a lot of uncertainty, people have nerves, fears. I think you have to address their fears, calm their nerves, give them more education, help them understand, and again, real estate market long term has, historically always done well, especially in a country like Canada, especially with, the life we live here. We're one of the top, countries in the world for health, for safety, et cetera. And you want to own a home, right? You want to build your wealth through your home. So again, I always say this, if you can get in today, you can't predict the future. Yeah. Get in today. We don't know what tomorrow holds. We don't know if interest rates will change or qualification rules will change, or you got to put more down. We don't know. We legitimately don't know. So if you're going to get in now. It's a great opportunity. I find it a little funny, and I've heard this before, that the real estate market, like the stock market, is the only market where when people get a discount, they run the other way. You'll see people lining up to save a buck on toilet paper during COVID. Yeah. Right? And they'll wait 3 hours to buy a roll of toilet paper, but you get a house at a 25% discount. Oh, there must be something wrong with it.
Yes, there's something in the markets. Yeah.
So I'm a big believer in real estate. I'm a big believer in holding real estate, and historically, anybody who's held real estate 10, 15, 20 years has done extremely well. Yeah. So that's my advice. If you can get in, take advantage of it. Don't wait. It's never the right time. What's
that saying? It's date the mortgage, marry the home.
That's right.
Yeah.
That's right. Actually, the mortgage should be more of a separation agreement, if you ask me, but you definitely want to marry the home.
Marry the home.
Yeah.
Okay, ready for some rapid fire questions?
I don't know. Depends on the questions.
I've got my computer, and I'm sure you're going to critique this from a camera angle's perspective, but I need this. It's got to be rapid fire. Okay. Favorite neighborhood in the GTA?
Midtown.
All right. Best wall paint color?
Blue.
Penthouse or backyard?
Backyard.
Okay. Would you rather be walking distance to your favorite restaurant?
Walking distance.
Or always have a parking spot?
I didn't matter what the rest was. The answer was walking distance.
Nice. Okay. In the holiday spirit, apple cider or eggnog?
I don't drink, so apple cider.
Eggnog, it doesn't have to be alcoholic.
Well, maybe the places that I go to.
Yeah. Okay. Home ownership means?
Security.
All right. Cut. That's a wrap.